So let's move on to our next presentation. It's gonna be on the subject of cost of careful imperatives for digital transformation in credit. And to have this presentation on the stage, we would like to request Mr. Sanoop Sashindran, product lead from Sentinel from FinBox on the stage. Let's give him a big round of applause. Mr. Sanoop sir is requested to please join us on the stage for presenting his presentation.
So good afternoon everyone. My name is Sanoop Sashindran and I'm a product lead at FinBox. I'll use this time, so lending and credit underwriting have been evolving over time. And at FinBox, we have been focusing on building systems and platform that allow lenders and partners to build a system that can scale with the growth and the evolution that is happening. So let me just ponder on this slide once. In the lending systems, we mostly focus on a key metric called, which is cost of moving fast. There may be cases where you are doing bad underwriting, loose policies, or aggressive approvals. Whereas there is a hidden factor, which will be the focus of the discussion today, wherein how cost of moving slow is actually impacting your business. So when you look at the bad decisions that were taken in the course of lending, you tend to blame it on, let's say, an aggressive approval, but that's not the only reason. Your policy that was supposed to go live ran stale by the time it actually was in production. And there are multiple factors that contribute to this lag in the system by the time you decide on what to do and by the time it actually goes to production. And we'll be focusing on this lag. So if you want to broadly categorize a credit underwriting policy going live, it can be majorly factored into three buckets. There is a macro shift. Now these are your borrower behaviors, the kind of partners you have onboarded, your sourcing channels, which is the key focus for most of the lenders. Then there are some added on responsibilities which are like new fraud patterns being introduced. And you now have to put your main focus on hold and try to figure out what extra sources of information can I use to solve this fraud pattern. And lastly, our good friend always brings up some sort of regulations to keep lending in check. So there are multiple factors that can introduce lag in the system, and the risk of losing a good customer is always tied up or related to this lag. And when you look at what metrics you usually consume or look at, in an MIS dashboard, you probably might be looking at what are the bad loans that went through, what is the NPA like. But what you should be, or what you are missing out is, among the borrowers that I have said yes or no to, how many of them were approved by, let's say, a stale policy? How many of the borrowers that I have rejected probably got a loan offer from a competitor, right? So the mindset is that if we have rejected a customer, it's most probably going to be a bad borrower, probably have a potential of default. 25 to 35% of cases get approved by introducing more data parameters on top of your existing policies. So your false negative is not a risk uplift, but it's actually a loss for you. Now, if we want to zoom out and look at where the industry is heading, there has been around 11 plus circulars that have been put out by RBI. There has been a fourfold growth in the origination channel by, let's say, a mid-sized NBFC. And with the advent of AI, there have been a huge increase in synthetic fraud. So you need the cost of being slow is very heavy right now. Now, if we again just focus on the regulations, there have been multiple types of regulation introduced by RBI, and each type usually has dependency on a certain team. So if I have to just give you a small glimpse, the DLG guidelines a lot of work for, let's say, a tech and lending operations team. A DPDP was, let's say, for a legal and tech or compliance and tech team. Now, whenever a new kind of circular gets introduced in your entire lending operation, certain teams' bandwidth gets assigned to it. And you need to have a system that is able to adhere to the compliant request as well as your day-to-day lending operations. Now, let's take a very realistic example of how, let's say, you want to launch a new MSME product through a fintech partner. Now, again, there are two players here, a lender and a partner. The typical process, what gets communicated is that we'll launch the product in 6 weeks. But when it actually happens, the business team starts with the PRD and it takes, let's say, 1 or 2 weeks. The PRD is designed for the developers and the compliance and other systems, which take their own sweet time, and there will be, let's say, a developer would have a negotiation around by when they will be able to deliver it to the partner. And when the development happens, compliance will bring up new loopholes, and then this entire feedback loop happens, which pretty much delays the committed timeline. And another major pain point when it comes to a lender-partner integration is the partner also has to integrate the lender's APIs or systems into their environment, which again takes a backseat because it's not standardized. A lender A will have a certain structure of data and that will be given to the partner versus lender B. So there's always a lot of delay when it comes to partner integration. And finally, when it goes live, it takes around the 6-week timeline pretty much gets extended to a 4-month time period. And in this due course of time, there is already a competitor who's been underwriting your borrower pool, and the risk policy that you must have defined during the BRD has pretty much gone stale. So it's very important when you're launching or making changes, you need to have a system that can collaborate between each other and allows you to go live faster. Now this is something this is how we solve this entire problem when it comes to a lender-partner integration. So we have 3 main pillars. So one is called a journey studio. So this is responsible for building an end-to-end journey with business and risk combined. This is where the product or a business team can just use a platform to create a journey using your workflow kind of an interface without having an engineering person dependent. And once your journey is being constructed, there is an underwriting platform which we call Sentinel, where your risk team and policy team can iterate on policies, can do back testing, can do shadow testing on past data, and build a policy that can be shipped quickly. And these can happen independently. And lastly, there is a system which we call Prism, which is it's like a marketplace model wherein we have a bunch of lenders on one side, a bunch of partners on one side, and we built a middleware that allows, let's say if a new partner comes in, the lender's APIs are standardized for a new partner to consume. And once they have integrated, a new pool of lenders can be enabled quickly. Now, this kind of orchestration allows a new loan product to be, let's say, taken live within days instead of months. And once it goes live, we have again the underwriting platform wherein you can monitor cases and check, improve their performance day by day. And another important thing that we have realized while building this journey and relationship is that the expectation when going live with a new loan product, is that we'll build the best loan product from day one. I think that mindset needs to change because nobody knows how their borrower profile is going to be. You need to be out in the market as quickly as possible and have a system that can control your risk and allow you to iterate faster. So we always preach on taking your system to production. Start underwriting 10, 20 cases first, see how the systems communicate, see what kind of risk is coming through. And then you optimize, you loosen your policy, increase more fields in the journey, and then you will have a very stable product. It will not happen on day one, but it will gradually reach there. And this kind of approach has a compounding effect with performance. So a new launch of a loan product or a new launch of a policy, which could have taken, let's say, 6 weeks, if it can be crunched down to days, then you have a compounding effect on how much time you can spend on analysis and optimization. So this is backed by our own lenders and customers. So just to give you 3 examples here, there is a private sector bank, a top 5 private sector bank, who has taken the policy from design to production in 4 days with a lot of testing and simulations. For clients like HDFC, Kotak, Poonawalla, and the list mentioned here, we do around 50 million credit decisions per month. And another point to highlight here is that the underwriting tool is not only used for approving or rejecting a customer. There are various use cases, like even a partner is using a tool for marketing campaigns, for bringing a pre-approved or pre-qualified funnel in the system. So the banner that you see in, let's say, a money control can be controlled by a policy in the back. And lastly, the Go Live product of the same example that we showcased, an MSME lending with a fintech partner, has been taken live in 3 days. And yeah, I mean, so this is what we preach on. Definitely it was not the best journey live, but it was serving production, and that allowed them to iterate faster. Now let me focus or explain more about these 3 pillars that allow us to do this. So Sentinel AI, as I mentioned, is the underwriting platform that is connected to various data parameters that you typically use in underwriting, like bureau, banking, GST, ITR, all of it. And there are a lot of intelligence that are pre-built in the system. So instead of you depending on an LOS or any external vendor to create these parameters, these insights are readily available for you to consume. And it has a lot of functionalities that allow you to test, validate your policies, and has a controlled way of moving it from ideation to live. There are a bunch of cases wherein if you have a new, let's say, a scorecard model, you have the feasibility of running these models in parallel without actually impacting your business, and evaluating how the model is performing and making tweaks to it. So that's the underwriting platform. It's primarily used for any kind of decisioning, not just your approval or rejections. The Journey Studio is the front-end layer which builds the customer journey. So this again is like a no-code interface wherein we have modules, and each module is config-driven. So if, let's say, you want to add an application form with certain parameters, that is just a drag and drop interface, and you can just choose what you want. And how these data can be correlated, all of it can be done in one single system. And this Journey Studio talks to Sentinel for any decisioning in between. And lastly, Prism, as I mentioned, is the marketplace layer, where the main USP here is the standardization that we have added for a partner to consume and for a lender to integrate, which makes it very fast for any lender to come into the system. And as soon as they come, they have a pool of partners that they can start the business with. And having this kind of a system allows them to even quickly benchmark, is their credit model fitting the customer personas that the partner is bringing. So these 3 pillars pretty much drives how you can start onboarding new loan products with FinBox. Right. So lastly, I'll just talk about what was the key focus for us. We've built system for scale, especially the underwriting platform, because that's the top of the funnel product, and it has to be very fast. It has to be configurable enough for you to test various scenarios. And all of these journeys that we even give are compliant by design. We again are like ISO certified and SOC 2 compliant, so we have these kind of iterations on a quarterly basis. So we have to follow these criteria, and we've built these models or whatever config driven modules in such a way that you can just plug and play the logic of obfuscating PII data. All of it is inbuilt in the modules. And there is something that we have launched, and it's in, let's say, a beta phase, wherein we are using, we're trying to solve a problem in the secured industry, which is the the RO, CPA, BCM send back kind of a scenario, wherein documents that are requested in a secured journey tends to be very subjective in nature. It can't be done digitally because a lot of depends on what the BCM wants. So what we have figured out is it's a very operational driven industry. So why not use AI to solve this particular process? So the RO uploads all the set of documents, and when you create in this platform, which is again presented in a way that it has the program level configs already in place. So if let's say you are doing an MSME journey, there would be let's say a banking, GST, ITR information that are required. But for certain scenarios, if your let's say KYC address and let's say electricity bill address are like very far, then you might need some additional information. So these are something that happens when the credit manager is checking the application. If your own house proof does not have your name, then you need an affidavit, right? So these kind of custom scenarios are built in the configs, and when the RO uploads his document, the system understands what is uploaded. It's multilingual also, and it will pretty much nudge the RO that these are potentially incorrect. You might have to re-upload it, or you need an additional document on top of it. So we're trying to eliminate we're trying to reduce the TAT of a case moving from RO to BCM by using AI. And we feel operational optimization is easier to do than adding an intelligence on whatever documents has been uploaded. And lastly, all the modules in FinBox are composable by design. So if you want just the Sentinel, you can consume it. If you just want the Journey Studio, you can consume it. If you just want the Prism, you can consume it. So we've structured it in a way that each product that we have built is targeted to solve a particular use case which we felt was a big bottleneck in the entire lending operations. And the design is in such a way that all of it can be plugged into your current system without a lot of heavy lift. That's it from my side. If you have any questions, I'm happy to answer.
Hi. Yeah, hi.
Yeah.
Very well crafted presentation, Sanoop. Thank you so much. So a couple of questions. This solution, what you just talked about, it's typically for the manufacturing units, in the sense the people with their own balance sheets taking risk onto their own balance sheet, or is it can be applicable for the aggregators as well? That is one.
Can you, your voice is very muffled. Can you please repeat?
Am I audible now?
Yeah.
Okay, cool. So I was asking that, is this solution available for the aggregators as well, or you have just crafted it for the large balance sheet players like the name I saw? That is one. Secondly, how is your pricing structure? We can discuss it offline, but is it something for the base layer startups as well? Some solutions available, or only for the established balance sheet players?
So we solve problems on both sides of the industry. One is the origination part as well as the lending part. So we basically functioned ourselves or positioned ourselves as an ecosystem provider. Given your use case, our systems are configurable enough to fit in. So I'm assuming you are coming from the sourcing part of it, not from the lending part of it. So we do have a bunch of solutions from the sourcing part also. Some of it I gave an example around marketing campaigns and all, but these are more from an unsecured example. But as an aggregator or a manufacturing might have a different use case. I'm sorry, what was the second question?
Second one was on the pricing. So is there a
pricing? So yeah, that's a very tough conversation to have on stage here. But the pricing is structured in a way with economics in mind. It's not a flat base kind of a thing. We have to understand, both of us our aim is to make you grow, and in this process we should also grow. So the pricing
you have a SaaS based structure or a CapEx OpEx based structure?
It depends on a lot of factors. I can't give you a yes or no there. We can definitely connect to discuss this.
Can we have a big round of applause, sir? Thank you. And may I now request Mr. Sanjay Ghosh, General Manager and Head of Saraswat Bank, to please come forward and kindly felicitate, sir. Can we have some music, please?
Thank you so much.
Missed the initial part.
Let's have a big round of applause, everyone.